So once I've marked all of the trades for a day on the chart, using the logic that the software will use, we can then export these trades to a spreadsheet. TradeStation has its own programming language called Easy Language, and I've written the code in here to export all of those trend lines to a spreadsheet. So we'll go ahead and do that now. This allows us to change the spread of the particular pair we're looking at and the exchange rate to turn it back into Aussie dollars. So the spread we're using here is 1 pip. That includes any commission that we would pay to the broker. The current broker we use is IC Markets, and their spread is between 0 and 0.1 of a pip on Euro US dollar. And then on top of that, they charge a commission which is equal to about 0.7 of a pip. So I've just rounded the total up to 1 pip. So that means all of the profitable trades, which are these aqua-coloured trades, will be reduced by 1 pip, and the losing trades will have 1 pip added to them. So we export that now to a spreadsheet by, we just have to turn that on, off and on, and that'll start exporting all of the trades into a spreadsheet like this. And when it's finished, we'll get some figures up here. So you can see that these are the spread adjusted net profits from each trade. 0.9 of a pip there, we lost 4.1 here. So all of the 2 pip trades have 1 pip taken off them, so they become 1 pip winners. And the losers, as I said, have a pip added to them. There's the exchange rate, which will turn everything back into Aussie dollars. So for today, we did, or for this particular day, the 13th of April, we did a total of 170 trades in this pair. That's actually pretty low. We normally do around 300 trades a day. We accumulated a total of 188 pips for the day, which is an excellent result. If we were trading a $100,000 account and just trading it flat, so every trade was executed with a $100,000 trade size, so no leverage, we would produce a return of 2.66% for the day. 2.66% without leverage for one day. I have done these, back testing of various pairs dozens and dozens and dozens of times over randomly selected days from the last few years across 30 different pairs that we trade, and we just get the same results over and over again. On low volatility pairs, we average 1 to 1.5% a day, and on the higher volatility pairs, we average anywhere from 2 to 5% a day. In all of the back testing that I've done, I've never had a losing day. This thing simply follows the flow of money, and it's virtually impossible to have a losing day. Of the 170 trades that we executed, then 154 of them were winners, 16 were losers, so we have about a 90% winning rate. If you started trading an account and built some profit into the account, a profit buffer into the account, then there's no reason why you wouldn't want to use leverage and lever up some of that profit. So if we leverage this thing to 5 to 1, the return for the day would be 13.3% instead of 2.6%. At 10 to 1 leverage, it's 26% a day. And at 20 to 1 leverage, that's 53% a day. You can imagine how quickly money compounds when you're compounding it at 13, 20 or 50% a day. So we'll very quickly reach whatever the liquidity limit is for that particular pair. Obviously, Euro US dollar will have a higher liquidity limit than any other pair. So it's a highly, highly profitable strategy. All we need to do is automate the strategy, write the code. All of the logic for the strategy has been figured out. We simply just need to write the code. And I think that can be done probably in about a 3-month period. On this particular hard drive, I have dozens of hard drives full of back-tested results. Here there's Euro Canada, which I just did over the weekend. This one did 220 trades for the day, collected a total of 292 pips. Trading flat with no leverage produced 3% return for the day. Again, we had a 90% win rate, and if we levered up that return, then we could produce 15, 30, 60% a day returns with a 90% win rate. There's some more Euro US dollar. This was done on the 2nd of May and 3rd of May. For this day, that we generated 314 trades, made 402 pips, produced a flat return, a non-compounding return of 5.67% for the day. There are fund managers out there who'd be happy to make 5% a year. This thing will make 5% a day. 93% winners, and if you leverage that thing up at 20 to 1 leverage, you'd be making 100% a day return. So with a relatively small account, you could compound that up into very large numbers very quickly. There's another one for the next day, the 4th of May. The day starts on the 3rd of May, goes into the 4th of May. 325 trades for the day, 435 pips accumulated, 92% winners, and again, if levered, unbelievable returns, daily returns. Over the years, I've done dozens and dozens of these things. You can see there. This is just one hard drive where I've accumulated some of my research. I have bucket loads of this. This is a well thought out, well tested strategy, and the last step remaining is to automate it with some software. We also have an option protected strategy, but that's a whole nother story.